Alright, let's dive into something that's been making headlines lately, and honestly, it's a bit of a wake-up call for a lot of people. Imagine this. Over 1 million Aussies are now in what's being called extreme mortgage stress. Yeah, you heard that right. And what's even more eye-opening? It's hitting lower-income households the hardest. Personally, I think this is one of those stories that doesn't just affect a small group. It's a symptom of bigger economic trends that we all need to pay attention to. Here's the deal. According to Roy Morgan research, about 1.06 million mortgage holders are now classified as extremely at risk of mortgage stress. That's nearly 20% of borrowers. What makes this really interesting is the timing. This jump happened in the 6 months leading up to June 2026, and it's the highest it's been since 2024. In my opinion, this isn't just a number. It's a reflection of how quickly things can shift when interest rates and inflation start climbing. Now, let's break this down a bit. Roy Morgan defines extreme risk as households spending between 25% and 45% of their after-tax income on their mortgage. That's a huge chunk of your paycheck going straight to the bank. What many people don't realize is that this isn't just about higher interest rates. It's also about inflation eating away at purchasing power. And let's not forget the global context, like the impact of the Iran war, which Michelle Levine from Roy Morgan pointed out. It's like a perfect storm of factors hitting these households all at once. Here's where it gets even more concerning. While the top 60% of earners saw some relief between 2024 and 2025, the bottom 40% got no break. None. From my perspective, this is a clear sign of growing inequality. Lower-income families are essentially stuck in a cycle where financial stress either gets worse or stays the same. And the latest data shows that extreme mortgage stress among these households jumped by about 11% in early 2026. That's not just a statistic, it's real people struggling to keep their homes. But here's the part that really gets me, the concept of mortgage prison. This term refers to borrowers who are trapped in their current mortgages with no way out. Maybe their home's value has dropped, or interest rates have skyrocketed, or their income has changed. Peter White from the Finance Brokers Association Australia explains it well. Banks assess your serviceability, meaning they check if you can afford higher rates, sometimes up to 8% even if the current rate is 5%. And get this, banks have this habit of repricing the back book, which means they hike rates for existing customers even higher than what new borrowers pay. It's like they're tightening the noose on people who are already struggling. If you take a step back and think about it, this raises a deeper question. How did we get here? I mean, wasn't the property market supposed to be a safe bet? What this really suggests is that the system isn't as foolproof as we thought. Property prices are dropping, interest rates are rising, and people are getting stuck. It's not just about bad luck. It's about structural issues in the housing market and the broader economy. A detail I find fascinating is how this crisis highlights the gap between policy and reality. Wage growth, tax cuts, and interest rate cuts helped some people in 2024, but they didn't do much for lower-income households. It's almost like these measures were a band-aid on a much bigger wound. And now, with inflation and interest rates back on the rise, those band-aids are coming off. So, where does this leave us? Personally, I think this is a moment for serious reflection. Are we doing enough to protect lower-income families? What does this mean for the future of home ownership in Australia? And more importantly, what can we learn from this to prevent it from happening again? I'll leave you with this thought. If over 1 million people are in extreme mortgage stress, how many more are just one rate hike away from joining them? It's a question that should keep all of us up at night. Let me know what you think in the comments. How do you see this playing out? And what do you think needs to change? Let's keep the conversation going.